Good morning, everybody. Welcome, welcome, welcome. Thank you for coming. On behalf of CRMSDC's President and CEO, Sharon R. Pender, I am Renee Sanford, the Project Manager for the KeyBridge Business Recovery Program. This is the build a business that can take a hit with M&T Bank. So in March of 2024, countless business leaders went to sleep with the plans firmly in place. Truckers had mapped out when to get in line to pick up their loads at the port. Car dealers were eagerly waiting their latest models rolling in from their factories. Suppliers and supplier services had routes planned and deliveries scheduled throughout the Baltimore region. Then at 1:29 a.m., all those plans collapsed along with the Francis Scott Key Bridge. No new cars, no load to pick up, no clear route to deliver products and services for waiting customers, but the rent was still due. Loans payments didn't pause. Employees still wanted to get paid, right? As we open this seminar on adjusting your finances to withstand business interruptions, one shoe stands above all other. Capitalization remains the single most critical factor in a business ability to survive and ultimately thrive when the unexpected strikes. So at this point right now, we will go ahead into Ken with our with our upcoming events before we go into our speaker.
Good morning, everybody. Kenneth Clark. I'm a project consultant working with Renee Sanford on this project. We have a number of activities planned from both the KeyBridge project as well as from the overall CRMSDC, the Capital Region Minority Supplier Development Council. We have a number of projects and programs that you might be interested in participating in them. First of all, we have coming up in September our business golf event, a wonderful event where you have an opportunity to really practice business on the golf course. Making money while you're having fun is always a great thing to do. We have a day on the hill coming up in September. The date for that is to be announced, but it's an opportunity for us all to come to Capitol Hill to let our representatives there know what we're thinking about law, particularly the law that applies to advancing business, small business, minority business, and business in general. Our annual meeting is in December, which is primarily for people who've been certified in our business as well as the corporate members. And other webinars, there are a number of webinars and other training that we have going on regularly. So you could look at our website, CRMSDC, click on events, and you get a chance to see what we're doing. If there's something there in which you're interested, by all means, join us. One thing in particular, there's an AI training series. Everybody talks about artificial intelligence, but the key there is learning it and knowing how to use it to support your businesses. We've been running a series of training programs on that, which I personally have been finding remarkably productive and interesting and educational. I've changed what I do with AI considerably. And then there's a CMC training series coming up. CMMC is the new IT cybersecurity requirements that all businesses have to meet. If they're going to do business with the federal government. And there are changes coming in that, and we need to understand that since so many businesses in our area are federal government contractors. The next slide. CRP is one of our major programs, capital readiness program, designed to help entrepreneurs get ready to do business. How to build your capacity, meaning how do you find money, access to capital, how do you increase the capabilities of your staff and your company to be ready for business, access to networks and emerging markets. It ties in perfectly with the Capital Region Minority Supplier Development Council's activities that we have going on, because they allow you to connect for contracts, which is the number one motto of the Capital Region Minority Supplier Development Council, connecting people to contracts. both federal as well as corporate. Corporate primarily because we're a corporate organization, corporate membership organization with minority business affiliates. And we're expanding with this program into all businesses. All small businesses are eligible to be part of the capital readiness program. So check our website, crmsdc.org/events, and see what's coming up. You might find something that's very interested and educational and helpful for your business growth. Thank you.
Okay, we're getting ready to introduce you our speaker, Mr. Richard Ojuri. I hope I said that right. He is the VP of Business Banking Relationship Management with M&T Bank. He is going to come and share us some stories about how do your business take a hit and keep going during it disruption. So welcome, Richard.
Good morning, everyone. Thank you guys for being here. First of all, thank you, CRMSDC, for trusting me with your community and coming in here and sharing a few things with your community. I appreciate it a lot. Today, I'm going to just be going through a few things with you guys. I'm going to share my presentation now. So today, we're going to be talking about building a sustainable business that can, face the storms that society or the world may cause. Because as you know, we live in a forever changing world. If it was 10 years ago, no, I would have bet the house, everything in my retirement funds that there would never have been a COVID. But look at that. We had a COVID. So in this presentation, we're going to be talking about cash flow survival, smarter financing, and a very strong banker conversations and relationship. And then I think a hot topic that everyone's talking now about is AI, right? AI underwriting. How's it affecting the banking industry? And, we're going to dive into that. Please let me know if you guys have questions. We're going to take questions at the end. And again, I can't see you guys, so please forgive me. I don't want to be ignoring anybody. So I plan on talking to you guys for about 35 minutes. The main topics that I'm going to be talking about, which I did, is just specifically protecting your cash, using the right capital, because you can get capital, but if it isn't the right capital vehicle, then it's the wrong capital for you, right? Have a better banking relationship, and again, understanding how AI and banking can help you. And if you leverage AI, it can help out your business even more. So, disruption really typically comes a cash flow problem, right? What that means is, for example, if you guys lose customers, you guys are going to lose some revenue, right? If there's a contract delay, and as you guys know, if you are a government contractor or any contractor, I know on paper it says net 30, but in reality it's net 60 or net 90 at sometimes. And if you don't have the proper capital vehicle, your revenue can take a shot because you have to pay your workers. Your workers aren't going to pay. They're not going to wait for you to get paid from the government. They got to get paid. And we also have a bunch of businesses that are seasonal, right? The big example that we always use is Target, right? I think beginning of the year, Target always seemed a little bit dead, things of that nature. But then once the holidays come around, Christmas, they make their whole revenue in about 3 months, which is crazy. 2 months, even a month sometimes, which is crazy, right? Cost shock. We all know what's going on in the economy right now. Inflation is through the roof, right? So we need to make sure that you're controlling your margins, right? You need to make sure you have a good relationship with your supply chain, right? And unexpected repairs, right? Being able to set some funds away for a rainy day. Because, for example, if you're in the restaurant industry and your stove breaks down, that's your main revenue driver. You got to find a way to make some food. So you got to have money to be able to, to make a quickly repair for that. And this kind of goes into the contract delays with timing shock, slow receivables, right? And then you have to build some of your inventory depending on what type of industry that you're in. And then, just like I said before, payroll before collections. But I think the real question that everyone wants to ask is, are we profitable, right? Do you have enough liquidity at the right time? Funny enough, I'm at a conference here in Tampa, and I was talking on the panel. I think one of the things that all bankers can agree on is I think revenue is a sexy number. Right? When you're talking to every business owner, they say, "Hey, I make XYZ $1 million." All right, cool. How much are you actually letting? Right? How much are you keeping? Right? Because I always say the example is, listen, I know a business owner that makes 50 million, but they net 50,000. Right? But I know another guy who does 5 million, but nets 400,000. Which one is the better business? On paper, you might think the 50 million one is because it's a bigger revenue, but in reality, I'll take that $5 million business all day because I'm keeping more money. So, how M&T can support a business during disruption, right? We're at M&T Bank. You guys call me, or you call any other banker, commercial banker, and you say, hey, XYZ happened. I'm first going to sit down to understand what happened. Is this something that's a little bit temporary? Like, hey, okay, I understand this is happening. This isn't going to happen all the time. Is it more so related to structure? So how did you set this up? Is this something that you need to just reverse in your business? Is this policy that we need to change, or rules that we need to change? Or is it growth? We're growing too fast. Or, like, which could be a bad thing or a good thing. It just depends on how everything is shaped. And then after we move on from the understanding the problem, we're going to diagnose the problem. All right, cool. I think I have a solution, right? Let's say, for example, contracts. Contract is late, but I need to make payroll. All right, I know a vehicle for that. Let's talk about a line of credit from where you can pull from to put into your operational account, so that way you can absorb that, so that way you can pay your employees, right? Is it a leverage problem, right? Or maybe we can leverage this to do that, so that you can get some capital, receivables, obligations, collateral, timing, right? We're going to just diagnose the problem, so that way we can understand how we can provide a solution for it. And then also, we're going to connect you to the right people. A lot of times, to be transparent, M&T Bank, we may not be the right business or the right bank for you for that certain time. Or just to be transparent, we just may not be able to help you. But that doesn't mean anything, right? Because we have a wide range of relationships across the community, right? Whether it's a CDFI or it's just another credit union or another bank, right? So just because if we can do it, we're going to do it, right? Which is why we're going to diagnose the problems. If it's something that we cannot do, I'll go ahead and make a referral. And then structure. I can't say this enough. You can have a problem with your business and you need capital, but if you're in the wrong capital vehicle, it doesn't help you out. It actually hurts you. I think a lot of times, right, just everyone comes and says, hey, Rich, I need a line of credit, right? Because you know why? They love having a piece of credit out there where you don't have to pay on it immediately, but you can draw from it. Well, let me tell you something. Line of credit are typically higher interest rates than term loans. And if you use all your line of credit up, you're only making interest payments only until you make actual principal payments to it. And then if you're only making interest payments to it, you probably not going to pay off that line of credit in a timely fashion. And that's not what line of credit is used for. That's not what that vehicle is used for, right? So we're going to make sure we set you up in the right facility to make sure that your business can thrive off the capital that you get. And the little quote I have here is, relationship banking works when the banker sees the problem before it comes to crisis, which is why developing a relationship with your banker is essential, and you're communicating with your banker frequently, right? Every business that has different cadences. I have clients that I talk to on a quarterly basis. I have clients I talk to on a monthly basis. Then I have clients that say, hey, Rich, I don't really need you to be calling me monthly or quarterly. Talk to me yearly. Just depends on what level you are, where you're at in your business cycle. Cash flow survival, the 13-week flow, right? So I think when conditions change fast, annual budgets are too slow, right? You need to make sure that you're forecasting everything, right? I think a lot of times what makes a business successful is when they're projecting and they're keeping a monthly or weekly, however you want to do it, track of what's going in. You need to look at your numbers across the board so that you know what's coming in and what's coming out, right? You also need to know, okay, cool, this is where I want my business to end. Let's keep numbers short. I want to make, $1 million. All right, cool. That means I need to bring in X amount per month. So I need to make sure this is what the projected cash amount that I need to have, right? So projected cash you need to have to be able to make your business stay afloat. You guys need to write down and have a budget for how much cash you guys need to have, so that way your business can stay afloat. And then also you need to keep an eye on that. And then also have another side of where you want to be, right? So the moment you start seeing your cash drop below that budget or drop below the the projected cash that you have, okay, cool, I might need to talk to a banker, or I might need to change a few things so that way we can increase our cash flow, so that in case anything happens, you have cash for a rainy day. So there's 4 levers to create a breathing room. Right? You can accelerate AR. You need to invoice immediately, right? It depends on what business you're running, right? Because everyone runs a different business. Things happen. But if you have the leverage or the ability to accelerate your AR, meaning invoicing immediately or invoicing earlier, then that can also help you collect your AR faster. right? Protect your cash, right? If it's a must pay right now, pay it. If you can delay it a little bit, more than 100%, let's do that, because cash is king, as you guys may know, and you need it for a rainy day, right? And you need to discuss your terms and conditions with your vendors or customers, right? Negotiate things. I think it's very good to have deposits, right? I'll be personable, right? My mom is a CPA. She's an accountant. She has her own tax business, right? Sometimes she might say, "Hey, Rich, man, like sometimes I just get tired dealing with X person because I do the taxes and they don't pay me until a month or two after I already submitted the taxes." So I tell my mom, "You need to start collecting a deposit, right? Before you even look at the taxes, I need, I don't know, 20, 40% down, just so I know." And of course, things change, right? You have your all-star customers that have been coming to you for 5, 6 years that sometimes, okay, cool. You may not ask to get a deposit from them because they've been coming from you for years. But if it's a new person that just, hit up for your service or for your marketing that you're doing, you need a deposit. You need a deposit, right? And then establish the right credit facility so that when cash is gone, you have backup. Because as we all know in business, things happen, right? No one's perfect. We can all create a plan, but things change, things happen, life happens. So you need to build up a backup, whether that's cash and that's credit, right? Everyone knows the best time to get anything from a bank is when you don't need it. The moment you need it, it gets a little hard to get it from a bank, right? So we need to be proactive. You need to be talking to your banker. You need to plan ahead and not wait for when something happens, then to try and go after it. So financing options. So let's go over it a few. I know I've been talking a lot about the right credit facility, this, that, and the third. So how do you know what's the right credit facility? We're going to go through each line by line to match it up for you. The most popular one everyone talks about is a line of credit. These are seasonal and timing gaps, meaning you need this line of credit to pay something or payroll or to buy inventory, a short-term working capital, right? I'm going to use this line of credit to help support my cash so I don't have to waste my cash, but I'm going to pay back the line of credit once I get paid from my AR or clients. That is what a line of credit is for. It's for short-term working capital needs. It is not for long-term, right? Because the worst thing that happens is if my clients or if I get a message from my back office saying, "Hey, XYZ client has an evergreen line." Evergreen means they are basically used up the line of credit, maxed out the line of credit, and are only making interest payments. They're not hitting that principal. That's not what we want, because that line of credit stays on our balance sheet. We have to have the money for it to support it. So we want to make sure the same rules apply for our credit card applies for that line of credit, using 30 to 40% of it and paying it off. Right? Okay, let's move on to equipment financing. It's pretty self-explanatory, right? If you have a vehicle, machinery, or just any equipment that you guys need, term loan for that, right? So that way, you can just use it and the collateral will be that equipment. SBA, to be transparent with you guys, not every business needs to go SBA. If you have a good business, we can do it conventionally. Typically, conventional has a lower interest rate than SBA. SBA is for startup businesses that are looking to do acquisition because there's a lack of collateral on there, right? The reason why I use SBA for more commonly is there's a lack of collateral, shortfall, right? So if there's a startup business, hey man, as you guys may know the stats, a lot of startup businesses fail. So I'm going to tap on the SBA so that way they can guarantee a portion of it. God forbid it fails, recovered, right? Or it might be a liquid problem. Hey, Rich, I'm looking to acquire this commercial real estate. All right, cool. How much money do you have? Kind of don't want to use up all my capital. All right, let's tap on the SBA's shoulders, right? Because with the SBA, you only have to put down 10%, right? But if you go conventional meaning we're not using the SBA, you're using the bank's funds, right? And we don't get any guarantee. You only get the bank guarantee on it. You have to put down 20%, in some cases more, all right? And then a corporate card. This thing can be tricky. It depends on what bank you're using, right? M&T Bank, we have a corporate card. It is a charge card. Yeah, whatever you spend on that, you have to pay back. It's different from a credit card, right? A corporate card is when you have a lot of employees. Let's say, for example, you have 20 employees, 20, 30, and you might have about 10 of those that need a credit card for travel or, spending certain things. You can give them a corporate card that is hooked up to one main account, and each person can then draw on that line on that corporate card, right? and you can regulate how much they spend. You can code certain things, block certain things, and the majority of the time, each bank will have a rebate. Whereas if you spend X amount, you get X amount back, or they'll have the rewards that is very popular right now. Match the debt to the job. So, like I said, if it's days or months or days, just a few days short-term working capital, like I said, line of credit, 1 to 5 years equipment. Real estate is long-term. Long-term means 20 to 25 years. 1 to 5 is your traditional term. Days and months, line of credit, short-term, right? You want to avoid, like I said, long-term stuff with a short-term repayment schedule. That's going to mess your business up more. So let's move on from, a little bit of the capital. Let's talk about how to build a relationship with your bank, right? A lot of people say, I'm sure every business owner has heard, you need a relationship with your banker. You need a relationship with your banker, right? How do you do that? I always say you need to interview the bank that you are doing, right? Let's start off from the very beginning. You're looking for a bank relationship. I tell all my clients, interview me. Talk to other banks too, right? And when you do that, ask the question that you already know to the banker. If they answer it the correct way, all right, cool. He's knowledgeable about your industry. If he lies to you, gives you something on the fly, it may not be the banker you want. And then when you leave the interview, give them a task. Hey, do you mind shooting me an email about XYZ? See how long it takes for them to do that, right? If they take a long time, is that who you want managing your portfolio, right? All right, now let's talk about the conversation. How should you be talking to your banker? What should you be talking to your banker about? The questions on the board or on the pre-show is a very good way to start, right? The conversation should be what changed in the business, what do you need the money to accomplish, how much, how long, and also what does the next 12 months look like so we can plan ahead. So that way, if you're telling me, hey, Rich, I'm looking to buy commercial real estate in the next 12 months, we need to start working now. Who are you talking with? How much money do you have saved up, right? Do you have the proper people to help you out and make sure that building is structurally correct? Now there's proof in the pudding. As a banker, you can talk to me all day, but I need to see numbers, right? I need to see balance sheets, PL, and the internal financials help. Your business tax returns are law. I always tell people, if I know your business is profitable, but you're reporting a loss, I can't help you, right? I know you're profitable. I know you're doing this. I don't like paying taxes either, but it has to happen. So you need to be truthful and show profitability in your tax returns to get funding, right? I need to see how much debt you have. If you have a lot of money, but everything's going out the door, I can't help you, right? You need to have some margin because we are cash flow lenders, right? And cash flow, right? You need to talk about, all right, cool, cash flow. You need to know how much you're forecasting. You need to know your numbers. Because as a banker, I can tell you something that's incorrect about your business, but if you don't know that your numbers, you won't correct me, right? So what am I trying to understand? This is the 5 C's of credit, right? 1, capacity. How can you pay us back? Do you have the capacity to pay us back? Do you have the cash flow to pay us back, right? Capital. How much equity have you injected into your own business? For example, majority of the time, banks are not going to finance 100% of the deal. Like, for example, which is why you said you need to inject 10% if you go an SBA route with commercial real estate. So that way we know you have skin in the game, all right? Collateral. We need, just in case you guys don't pay us back, we need to have something that's collateral. For example, let's make it very simple. Lines of credit usually just have a UCC filing lien on your business. That anything happens, we come after your business, right? We try to. Sometimes you might say, hey man, there's no real collateral here. Might just do an AOC lien on a residence. That typically doesn't happen that much with lines of credit with traditional banking. Now with equipment, that equipment will be collateral. With the commercial real estate, that commercial real estate will be the collateral, right? I'm not a collateral lender. People come to me and say, Rich, I have a property. Can you lend off of my property? No, right? If you're doing like investment real estate, cool. Or if you're doing an acquisition, all right, cool. Maybe I can use this to support the collateral, right? I'll do that. But if you're just telling me I need a term loan and you can take my real estate, no. The answer is no, at least for my institution, right? The conditions. I need to know what industry you're in. So that way I can know how to mitigate certain risks that is associated with your industry, right? It's very important. I won't look at a restaurant like I look at a construction company. Two completely different industries. And then I need to know who you are, your character, track record, right? A lot of times, yes, people only come to you and talk to business, but I know a lot of my clients personally. This is a relationship. I've been banking some of my clients for 5 years. There's no way we can only be talking business for 5 years. We're going to talk personal. For example, my client invited me to his son's graduation party, right? Likewise, I invited him to my sister's graduation party. Now, don't get me wrong, that won't happen for every client, but if there's some few ones that are family to me now. So let's talk about AI and banking, right? AI is a buzzword, but I'm here to let you know AI is not new. We've been doing AI and banking for many years now, right? When you guys make a payment and you guys get a text message, hey, is this you? That is AI. That is AI. What is new is just generative AI, right? So document intelligence, right? There's things now that if I plug in AI or I go into LLM, meaning large language model, it can extract and organize information quicker than me reading through stuff, right? It can detect patterns, like I just told you, that fraud stuff. Hey, this client typically doesn't really purchase things from X store. Let's see if that's done. And it can reduce a lot of the manual work that we do, right? So a lot of times before, which we still do, don't get me wrong, it's just writing out a full memo, right? There's bankers from the CRMSDC team that know loan committee is no joke. You spend hours on that, getting ready for loan committee. Now AI can kind of simplify a lot of that stuff and do things for me. Decision support. I want to spend a little bit of time on this, right? I think there's a fear going on right now in the media that, like, hey, AI is making the decisions. It is doing things that just, hey, I want to make sure a human can at least see it. And sometimes AI makes mistakes. You are 100% correct, and I think that is essential, right? I will be transparent. If your deal is really on the smaller side, a lot of that does come into a score-based metric, meaning, do you have the right credit score? Does the numbers make sense? It's going to be a very simplified answer. The bigger the deal, the kind of like the less AI is involved, to be transparent. If it's a $50,000, $25,000 deal, AI is going to be a part of my decision it. A human is still going to look at it, don't get me wrong, but a lot of it's going to happen a little bit quicker. So the changes in the workflows, right? You submit to me your financials, everything I need. AI then organizes everything. It may flag a few red flags. Hey, make sure you look at this. And then it compares it to your previous financials, right? I ask all my clients for 3 years of their financials. So AI would tell me, okay, cool. For example, it may just off eye glance, okay, margins have been coming down for the few years, or margins have increased, or cash has been coming down. Things that will typically may take me a couple of minutes to do, takes AI seconds. Then that's up to me to then review what AI has said to say, okay, cool. Does this make sense? Is AI right? Sometimes AI is wrong, so I gotta challenge it and make the necessary judgment, and then I make the decision. Okay, cool. Now, because I did the underwriting on it, AI helped me kind of button up a few things that I may have missed. Then I can then present it to my underwriter so they can put the structure, terms, and monitoring on it. AI can, just like the sentence says, AI can identify a pattern. Your banker may still need to explain why that pattern exists. Client scenario. All right. So let's go through this. This is a restaurant. I'm not going to say the name because, this is a restaurant owner. I had a client come to me and they were crying in their eyes. They were crying. Rich. I don't know if I can make payroll. I need payroll by the end of this week. I exhausted all my money. As I said, the easiest way to get money from a bank is when you don't need it, as sometimes. So when I looked at her financials, there was no way I could help her, to be transparent. It was no way. It was weak credit. They was taking a loss. I just wasn't able to help them. So I tell people I have two scenarios for you. I'm never just going to leave you with a no. I have two scenarios for you. Either I can introduce you to a CDFI, which is, for those that don't know, is a community development financial institution, which banks kind of lend money to or give money to lend out to businesses that we typically wouldn't lend money to. They don't accept deposits, though. They just lend money, right? And that route wouldn't do because you still have to do cash flow. The only reason why CDFI will lend money to you is because you just have a low credit score, right? Or there's a broker, hard money, right? They shop out your information. They can get you funding. The problem is you're going to be paying crazy interest rate, right? She said, Rich, I need to pay my employees. Okay, cool. Let's go to, and they're pretty quick. I introduced her to the broker. The broker got her $100,000. But guess what? She had to pay that weekly. I said, listen, I don't agree with this, but if you need it, use your own discretion. She took it, and honestly, she paid it, and then we were able to help her out in the new future with because she was able to structure her business better and repay her financial reporting. We were able to help her out afterwards, right? Because you got to refinance the 100,000. So that's kind of like what we do, right? It may not be us right now. It's not a no. It's not yet, but we can use our relationships to help you get funding, right? So just like I said before, she was in a high cost capital, weekly payments, cash was needed for the operation, and she needed to do it, or else she's going to have a disaster on her. How many no one works for free anymore? You got to pay your employees. The better alignment is, okay, let's refinance it so to get it out of the the high cost and weekly payment pressure to now move it into a more traditional lending, monthly payments, lower interest rate that's more sustainable for your business. Cool. So checklist for the next 30 days. So after today, this is what you should be using your this is what I hope you gain from the presentation. You need to build a budget or a 13-week cash flow forecast, right? You need to know how much cash you need to maintain your business, or know all your fixed expenses that goes with your business, and have that on cash if you can, right? It doesn't happen overnight. Just build to it. Start doing it now. So the moment you drop from that moment, okay, something's coming up. I need to start maybe delaying something so that I can build up my cash reserves again, right? Review every loan you have. Make sure it's in the right facility, credit facility. Make sure you're paying the right rate, right? Make sure it's the right payment cadence. Assemble a clean financial package. I didn't really touch on this because, it depends on what you're doing. But as long as you have 3 years business financials, 2 years personal, interim financials, and your debt schedule, should be in good shape. Make sure you have a good CPA, right? Know your top 5 cash obligation. This goes towards your 13-week cash flow forecast. Know what's eating your cash. So that way you need to watch that, right? And again, like I keep on emphasizing, meet your banker before and you need emergency capital, because banks are not the fastest people. To be transparent, we're not. There's too many hands in the pot at times, right? And then lastly, I didn't touch on this either, but your bank is just more than just a capital person. Talk to them about treasury. How do you send money out? How do you receive money? Talk to them about merchant, right? A lot of people are using different other, private merchant people. Majority of banks has a merchant department that can be a cheaper rate for you and cost less than, usually. I'm not going to say the other, merchant providers out there, but sometimes banks can be very competitive. It can be very competitive with the other merchant providers. Now I'm here to answer any questions and conversate about my presentation. And I thank you guys so much for listening.
Richard, question. I always found it when I owned my business to be very, very helpful to have a good relationship with your banker, because as a business owner, there were times when you have cash flow hiccups. So my banker, payroll's on Friday, I make payroll. What do you want? The last thing you want to do is not be able to pay your help. So my banker would float my payroll over the weekend until, the money came in on Monday or Tuesday. So I believe it's, talk about just have the relationship with your bank. I was just best be on a first name basis with your banker. So, you walk in the bank, say, hey, Errol, hey, Richard, how you doing? So
I'll tell you this, man. I'll take it into a more simple context. If you have money and someone came to you that you don't know and asked you for money, would you give it to them? Majority of people are going to say no. If you know somebody and you have a great relationship with them, or at least know them, and they ask you for money, and you kind of know they have a cadence for paying things back, they're a responsible person, are you more likely to give them some money? Yes, right. I'll tell you another scenario, which I'm currently going through right now. I had a deal come through with a client looking to build a franchise. Small deal. I'm like, all right, cool. We'll do it. Like I said, SBA is typically for startups, right? Because there's not a lot of collateral with that with your startups. So I tapped on the SBA. We were able to do the deal. Got an approval. I need an AOC lien because, as you guys may know or may not know, the SBA over collateralizes their loans. So I needed to have a lien on the house. I called him. He said, "Hold on, let me call you back." I'm like, "All right." I didn't think anything of it. Within the next hour or two, I got a call from one of our heads in the wealth management division. I said, "Oh, why is this guy calling me?" Picked up the phone. He said, "Hey, Rich, what's going on with this client?" I said, "Why are you calling me about this client?" I'm like, "Yeah, I mean, I told him what we did." He said, "Listen, Rich, that guy is a big client of ours in our wealth division. He has about 11 million in assets with us." I said, "Oh, this changes things a lot." I wasn't aware of that. But guess what? He had that relationship with somebody on our wealth side. They gave me a call, and guess what? We switched it from SBA to conventional. No lien on the house now. They already collateralized with our Wilmington, with our advisories. So I just added another lien on our secondary company, which is Wilmington, right? So that why it's good to know your people and to know your relationship, because you never know that, hey, this may not be the right vehicle for me, but if I have a good relationship with a bank, they'll be able to fix that and tell me how to structure that properly.
Good. Richard, when the Key Bridge collapsed, just looking at a real example here, did M&T change any of their rules or anything to help businesses in any way that would allow them to recover more rapidly? Did you take into account, that this was sudden and maybe folks didn't know because they didn't have this class before?
Yeah, man. To be transparent, I don't think M&T really changed any of their ways for the keybridge. But what I do know that we did partner with our communities to see if we can start teaching more things around that, right? Like for example, other things that are going on in the community affecting it. And luckily, at least in my portfolio, none of my clients were affected with the keybridge. I think they said if the Bay Bridge went down, God forbid that doesn't happen, that would be more of a problem, right? But I do have some bankers that did experience some turmoil with clients that messed up their route, because there are a lot of people. There's a big port over there, and that messed up their route to the port, made it longer. What they did was they had weekly conversations with them, right? It may not have been able to come up with a key bridge fund. We didn't do that, but what we did do, we were understanding of what was going on, so we didn't penalize people in the time being for, hey, I wasn't able to make X payment because of the key bridge. Okay, we understand that. We took that into account. We gave them maybe a couple of months break, not from payments, but at least from late payments, things of that nature. So that way we can kind of be there. We are human. We understand that stuff happens.
Okay. Martina, you have a question?
Yeah, good morning, everyone. So I had a question. So we do contracting where the invoices are 30, 60, and 90 days, but we still need to be able to make payroll and sometimes certified payroll weekly. So what size line of credit would a bank typically approve against contract receivables? And do you underwrite off of contract awards or only off of like historical financials?
It depends, right? If you're a more established business, depending on the amount, I say once you get past that three million stage, let's say for example you need a line of credit, right? I'm gonna tell you two scenarios. They say typically 10% of your revenue is going to be your line of credit. That's what the typical people say, right?
What's that
But
number
once you
again?
10% of your revenue
Okay. Mhm.
is what your line of credit should be. But in my experience, once we start heading over that 3 million size line of credit, we start going based upon your AR, right? 80% of your AR will then be your line of credit. And there is some instances where, hey, what if I'm a startup? I don't have revenue. Then yeah, we can look at how much your contract is and then underwrite that based upon your contract value. Maybe 80 to 75% of your contract value will then be the line of credit, or however much your payroll is for the next 2 months will be that line of credit.
Okay, thank you. I have another question, if
Absolutely.
it's okay. So another question that I had was, does M&T have any lending or treasury programs specific for minority contractors?
So I wouldn't say specifically for minority contractors, but what I will say is we are well versed in all industries, and we're able to help you out no matter the industry that you're in. And we do have programs. We have a small business program that assists business owners with learning a few things, introducing them to different county executives or the people that make the decisions in the county, and gives them a community. So we do have that aspect of it.
Gotcha.
Latoya, do we have anyone else in the chat that has questions for Richard?
There are no questions in the chat at this time. Thank you.
Okay. Earl, you had another question?
I did, Rich, and I had to step away for a minute, so you might have addressed this. Did you talk about diversification of cash flow and customer base? So not have all your eggs in one basket? I mean, for instance, you don't want to do all government work, all corporate work, so you need to have some kind of a mix between the two.
Yeah, man. So this came a big issue this year. I'll be very transparent. Was it this year or last year? I can't remember. Well, whenever it was where a lot of the government agencies were kind of just getting slashed. I'm not gonna make this up a political thing, but during like I tell all my government contractor clients, listen, you need to have diversification within your contracts, right? For example, if you do a lot of work with NASA, I shouldn't see 5 contracts with NASA. 100% of your contract shouldn't be with NASA, right? Now, don't get me wrong. The people that do that, they have a great relationship with it. But I tell them, I caution them, hey, maybe start looking at some other DoD prime contracts as well. If you're with NASA here, you might be with GDIT here. You might be with Bose Allen there, Lido's there. So that way you have a diversification. That God forbid anything should happen to that company department, you still have 3 other departments or companies to work off of, right? But if all your contractors are underneath one department or one company, and that company says, hey, we're done with you or we're gone, that's your whole business right there.
Yeah. In fact, Richard, I think to pick up on that, we actually advise businesses not to have all government contracts, but to switch off to have some corporate versus government. Because in that period last year, when the whole government shut down, nobody was getting paid anything anywhere, nonprofits or for-profit businesses, and those who had corporate contracts at least had some other revenue stream, unless that corporation was also a government contractor. So it is a tough thing to deal with. So if you go through a tough time with with your business, how long does it take you to rebuild, and how do you rebuild your relationship with your banker once you have screwed up?
To be transparent, depends, right? There's no black and white answer to that. And just because your business isn't doing so well, that doesn't mean your relationship with your bank should deteriorate or fall. It just means you need to have a little bit more conversations, a little bit more cadence, a little bit more hand holding. If your banker walks away from you when your business isn't doing well, that's not the best banker for you. Now, don't get mad at your banker for not being able to extend capital because your business isn't doing well. It's just what we gotta do. We have to make sure we can lend money to businesses that can pay us back. Because if your money is with us, we need to make sure we got money to lend to other people that are doing well, right? So, but what should be happening is, hey, XYZ is happening. This may be the reason why your business is not doing well. I tell all my clients, I am not your CPA. Do not come to me and tell me, hey, listen, I just don't, I'm a banker. I know enough to be dangerous, don't get me wrong. But if you're looking for 100% detail, go to your CPA. And if you don't have the right CPA, I can make an introduction to you to CPAs that can help. Because my relationships should be your relationships as well, right? And then also, like I said, sometimes you just need capital. Like that restaurant owner, it's not going to come from M&T if you're not in the right facility, or if you're not in the right business environment or business strength. So we're going to tap on a CDFI or we're going to top on my broker friends.
Mm-hmm. Now, you mentioned CDFIs. You said that the banks give money to the CDFIs to
100%.
lend out at different rates.
So it depends. So yes, we do lend to CDFIs, but sometimes we do a charitable giving to them as well.
Mm-hmm.
It just depends on what it is, right? If we have a wonderful relationship with them, we may just give them money yearly. So that's like our charitable or CRA giving.
Mm-hmm. Okay. And then they lend the money out. And the rates are lower
I wouldn't
and
say
more
lower.
flexible.
I think they're competitive.
Mm-hmm.
I think they're competitive with traditional banks, right? Because they're not in the business to just kill what they eat. They're not in the business for that. They're here to help also. CDFIs are here to help. Now,
Right.
they might have a higher interest rate than us, but it wouldn't be significant. For what I've been seeing sometimes, let's just keep numbers. I'm not saying this is interest rates today. Please do not. This is not interest rates today. But let's just say your bank offers you a 3% interest rate, and then CDFI might offer you 3% higher, 6%. But like I said, brokers will offer you double-digit interest rates, and they might offer you a weekly payment time, which is crazy to me. Imagine having to pay a bill weekly.
Sounds like a loan shark.
100%. They eat what they kill.
Right.
That's what I say.
Right. Most people think in here that SBA is a salvation for small business lending, and you kind of made some statements that indicate that's may not be the case. Explain more about those differences and what we should
And
be talking about to people about SBA.
I get in trouble often for saying this, but I'm a transparent guy. If you talk to a lot of bankers and they're not recording and you just have them in the room, a lot of them will say they don't like dealing with the SBA. I'm gonna be very transparent. The SBA is good for business owners that, and it's good. I think SBA is an overall good thing. Don't get me wrong. Let me start off there. SBA is a very good thing because without the SBA, banks wouldn't be doing deals to a lot of startups or businesses that don't have the right criteria that banks look for. Right.
Mm-hmm.
For example, for me to be able to extend a deal loan, you need to make sure that you have the cash flow capacity to service whatever debt you're looking to service one time in a quarter, majority of the times, right?
Mm-hmm.
With the SBA, you might need to only service that just one time, right? And that makes a huge difference in that. But what people don't say or may not know is the SBA over collateralizes all their deals. Majority of all their loans, which is a government entity that has to, right? For example, a conventional loan, when I wouldn't ask you to have a lien on your life insurance or your personal residence sometimes, and that the SBA may require in order for us to extend this loan or capital, you need to put a lien on your life insurance and your residences. Now,
Wow.
I don't lost 2-3 deals because of that, right? Where hey, we don't have the appetite to do this deal unless the SBA is a part of it because there's the risk associated with that. Another financial institution may say, hey, we'll take the risk. We're gonna go conventional. A conventional deal and the SBA deal, the conventional deal is beating the SBA deal all day when it comes to traditional lending, all day. But when it comes to real estate, SBA is very useful because you only need to inject 10%, have 10% down, but the SBA. Whereas conventional, you need 20%, and a lot of people may not have that 20% to put down.
Right. Yeah, I once did an entrepreneurial experience, even though I was working for CMP Telephone Company. I had a little business on the side. I went to get an SBA loan to get inventory, and they wanted my house. My wife said, "No, hell no."
This happened. That happened. That's why I lost a couple of deals. I've lost one of the bigger deals I lost today was a long-term client, and to be transparent, SBA deal. I'm not gonna go into the details of it. It was an SBA deal, and in order for us to do it, we wanted to do it, but we didn't needed to get a lien on the residence. Her husband is in no way, shape, or form part of the business, and her husband's like, "Hey, we're not putting a lien on the house. This is your business, right?" Which rightfully so. But another bank came in eventually and said, "Hey, no, we're not going to do a lien on your house." Lost that. right? With the client. It was tough to lose that, but that happens in business.
Mm-hmm. Okay.
Well, this has been very, very interesting. So thank you, Richard, for always giving us the drop, the tea, as they say, and for being so transparent and all the information that you're sharing with us. That is really, really appreciated. So it is 8:28. We're ending on time. So if anybody has any other final words or any other last questions, you got 1 minute. If not, we're going to give you your 1 minute back of your day and tell everybody thank you and have a great day.
Thank you, guys.
Thanks for coming.
All right.
Thank you,
Thanks
All
very
Richard.
right.
much, Richard.
Thank you, Richard.
Thank you.
Thanks, everybody. Thank you so much for coming. We appreciate it.
Thank you.
All right. Have a great day.